Hello, everyone. Welcome to Mortgage Crush Monday. I am excited to be with you this evening. I'm going to give everybody a couple of minutes to log on. This is week 2 of my series of Mortgage Crush Mondays, just educating and helping everybody in our community be able to strengthen their financial situation, stop wasting money, and invest in themselves and be able to own a home. Again, I believe owning a home is everybody's just right and privilege, and everybody should own some type of property. Hi, Kevin. Thank you for logging in. Hi, Alana, Nicole. Thanks for joining. Hey, Dante on my Instagram side. Excuse me, the screen is kind of shaking. Again, going to give everybody a couple of a minute or so just to log in. It's Mortgage Crush Monday. I'm so proud of my hashtag. This is the real MCM. Owning a home, being able to pay a mortgage and not pay rent, not waste literally hundreds of thousands of dollars over a lifetime paying rent. So we want to get tag a friend, let somebody know that we are starting this session. Tag somebody, text somebody, call somebody, get them on. You may own a home, but you may know somebody else who needs to buy a home or needs to purchase a home, or just need to understand the process of what it actually looks like. We're going to touch and talk about credit. We're going to touch on and talk about just the process, things to do, not to do. Just catching everybody up on last week. We talked about the trend and who's buying homes, knowing that it's 35% of the home buying market is comprised of people between the age of 25 to 35. We're the age group that are purchasing homes, so that's a great thing. Growing up, some people lived in apartments, or I know personally, my mom didn't purchase her first home until she was in her 40s. So thanks for joining, Keith. Thanks for joining, Rick. Hey, Nicole Marshall, how you doing on the Instagram side? So being able to break the trend. If you don't come from, like I said, growing up, if you grew up in an apartment and your parents didn't own a home or didn't own a home until late, just the process or the education behind buying a home, a lot of us just don't know how to, or we haven't been a part of that process. So I'm going to go ahead and get started. Again, send a text. You can tell people to go ahead and join us. What I wanted to start off with this week, last week, talked about who's buying a home. You need 2 years of work history to buy a home, not having any non-sufficient funds, not overdrafting on your bank account to be able to buy a home within a calendar year, having 2 years of W-2, or if you're self-employed, 2 years of your 1099s, being careful of write-offs, making sure you're allowing yourself to have some home buying power. And we talked about like the average price of rent and how it can go from $1,500 to $1,700 for a 2 or 3 bedroom apartment, especially in the Prince George's County area, higher in DC, lower in some parts of Baltimore. But just knowing that that's the same price that you can pay every month to own your own home. So what I wanted to talk about was the grants that are available. There is a lot of free money available in Maryland altogether, in Prince George's County, in Baltimore, no matter what county you are, there are a lot of grants available, and there are not requirements, very few requirements to qualify for a grant. One of the grants programs that almost every loan officer right now offers is in our area anyway, in Maryland, is a 2% grant program, where you can get 2% towards your down payment or 2% towards your closing costs. Okay. And so what I want to talk about, and without repayment. So let me tell you, there's a difference between having a grant. Grant means exactly that. It's granted to you. You don't have to pay it back. Okay. There's also other home buying assistance programs where you're required to pay the money back. So if you're a part of a first-time home buyer program, this 2% program actually applies if you have or have not, if you are or not a first-time home buyer. But make sure you know if there are requirements on paying back, if it's truly free grant money, or if it's money that you're required to pay back. That's very important. You want to know if it's a true grant. Grant equals free money. I don't have to pay it back, right? If it's not a grant, it's more of a loan or a second mortgage. That's the word you'll see, that it's a second mortgage. So be conscious and cognizant if you are truly having a grant where you don't have to pay the money back, or if you will have to, if you're taking out a second mortgage or against your home. Okay. Hey, Daniel, I was just about to text you. So Daniel Pete from Apex Mortgage is online with us. He's on the Facebook side. So if there's any questions from Instagram side, I will let you know. If anybody has any questions, hi Faye, hi Tina. If anybody has any, hi Rick, if anybody has any questions on the Facebook side, please post your question, and Daniel Pete will be able to respond. And so I just talked about the 2% grant program, Apex Mortgage. Daniel Pete with Apex Mortgage, he does offer the 2% grant program. And again, a grant is something you do not repay. If there's any program that you get money from, that's a key question. Do I have to pay it back? Or is this mortgage against, is this a second mortgage against my home? Okay, very important to know the difference. So I wanted to talk about, down payment versus closing. And some people may already own a home and they may already know, the difference in the down payment versus closing. But for those who don't, let me inform you. So your down payment, okay, your down payment can be between 3% to 5%, let me say, right? That's a good range. If you have a FHA loan, a Federal Housing Administration loan, your down payment is 3.5%. If you're someone on a better credit side, you can have a 3% loan or 5% loan, all the way to a 10%. 3% down payment, a 5% down payment, all the way up to a 10% down payment. Thanks for joining, Alicia. So again, if you, and I see your question on this side, how do you get financing on commercial residential properties? Okay, great question. I'll answer that in 1 second. And welcome Spotlight 03. Before I go into the difference in a grant and a down payment and your closing costs, this is our second series in Mortgage Crush Monday. And what I'm talking about now is the difference in a down payment versus a closing. So a down payment, there's two types of loans you can get. You can get a Federal Housing, FHA loan. That down payment is 3.5% of whatever your sales price is, okay? So do the math, 3.5%, times, if it's something that's $100,000, that would make a $3,500 down payment, okay? Your closing cost is the cost to process your loan. I would like to say, Daniel, if that's a safe word, right? That you have to pay your taxes, maybe be prepayment on taxes, your state taxes, your county taxes, city taxes, if applicable. It's where you pay for the real estate professionals. And I'll talk about who pays the commission, who pays your agent to represent you, right? There you also receive seller's credit, right? And the seller can give you money towards these closing costs. You pay your loan officer, the title company. This is where you pay people, where all the fees are, right? In the state of Maryland, DC, Virginia, I know that's most people are joining in. And the closing costs can exceed 6%. Okay, so for planning purposes, okay, you want to buy a home. You want to know how much money will I need to buy a home? Is that a fair question? I want you to write down 3.5% down payment, 6% closing. That's 9.5%. Whatever your loan amount is, I'll give you another example. If it's $100,000 times 9.5%, that totals 9.5%. Okay, that's how you can calculate how much money you need to close on your home. Now, we talked about grant programs that would subtract 2% of the loan amount, correct? So for your planning and budget purposes, do it from a perspective of a percentage. That will help you put enough money to the side. Now, your sources of money, it can be your 401k. It can be any savings account that you have. It can be gifted to you as long as that person can show where the money has been sitting for at least 30 days. Okay. Welcome, Berto. Welcome, Nakia. Welcome, Gilbriana. So being able to calculate and plan your funds to know how much money do I need to have sit to the side before I can buy a home, right? If you know you want to buy a home and you want a mortgage that's maybe $200,000, or I'm sorry, a monthly mortgage is $1,500. It's okay. You can shoot me a message, show me, say, hey, Lola, I want to be able to move. Right now, my rent is $1,400. How much house can I afford to have a mortgage for the same $1,400? It's possible in our area, right? Daniel Pete with Apex Mortgage will provide the exact number behind it, because we have to take into account the taxes and the interest rate. But he can give us a good estimated amount of how much house you can afford if you want your goal of a mortgage to be 1,400 or 1,600 or 1,700, whatever you're comfortable with paying. Okay, so again, being able to calculate based on what you're comfortable paying, being able to take that amount to know what that looks like, taking that monthly payment amount, knowing what that looks like in terms of a mortgage, if it's a $200,000 mortgage or if it's a $300,000 mortgage, and being able to set aside 9.5% of that amount and know that's how much money you need to save. Now, Dante, he asked a question. Daniel P., this is for you. Welcome, Troy. This question is for you. He asks, how do you get financing on commercial or residential properties? Okay, so financing on commercial, residential, Daniel P. with Apex Mortgage. Daniel, if you can post your number so I can shout it out to the Instagram side. He can do commercial financing. What happens, it's a conventional loan. So I talked about FHA, federal housing loans, and then conventional loans. When you do an investment property, that's an investment loan. You have to go conventional on that. It's not federal housing, and that down payment can be anywhere between 3%, 5%, or 10%, depending on your credit score. Okay, and again, that drives your down payment, your closing costs. Commercial investment properties work different, where you may or may not receive any seller's credit, how you did when you first financed your home. Okay, so I know people are interested. And Daniel's number, he's posted it for us, is 443-577-8956. That's Daniel Pete with Apex Mortgage. For your question, Dante, you can call him at 443-577-8956 and be able to apply for a commercial loan for an investment. And again, that's a conventional loan. So welcome, Tanya. So again, talking about how much money do you need? 9.5%, that's a safe number. Daniel P. does a fantastic job in making that number drop tremendously from 9.5%, because he has a grant program that offers you 2% on being able. So you're welcome, Dante. He offers you 2% a grant, money that you don't have to pay back, right? So if you have a home that's $200,000 and you save 7.5%, that's a safe number to have. There's some other money or credit you can get. One is from the grant program. The second credit that you can get comes from the seller of the home. So sellers want to sell their home. They understand that their goal is to help you reduce that closing cost amount as much as they can afford to. And I say as much as they can afford to, because they have a certain amount they may have to pay off on their loan, money that they know in their mind they want to be able to take away and walk away from the deal with. But sellers budget money in the purchase or sale of their home to be able to give back to the buyer. So they will credit you 1%, 2%, 3% towards your closing costs. Now, I said the max closing cost percentage is what? 6%, right? So if you have 2% coming from help from the grant program, and we're also able to get 2% seller's credit, that 6% drops to what? 2%. So now you're only left with your 3.5% down payment and 2% in closing costs. So if you had a home that's $200,000, right, and you only have to save 5.5%, somebody give me that number who has a calculator in front of them, because I don't, right? We're probably looking at about, $11,000 or $12,000 to purchase your home, right, at that price point of $200,000. So being able to, we can get money. There's money available to get. You don't have to save up $20,000, $30,000 to buy a home, right? Most people on your taxes, on your income, before tax time, people spend money on Christmas gifts. A lot of money, right? It's $11,000. Thank you, Mr. Daniel Pete. So people spend money on Christmas gifts. The average household on Christmas spends about what? $3,000-$4,000 on Christmas gifts, right? Average family for 2 adults, 2 kids. So if you can take and just reallocate your resources, if you can sacrifice for a season to give yourself the best gift that you can give yourself and your family, which is a home, right? This $11,000 that it will take you to buy a home of $200,000, okay? Let's pull back and make some savings, some sacrifices for Christmas so that we can be a homeowner in 2019 and not, again, continue to waste money month after month on rent. All right. Tax time. What's the average tax refund that you get? Right? Can we say getting $10,000 in taxes, getting if you got half of that, if you got between $6,000 to $7,000 in your taxes, could you sacrifice spending this money, right, on trips or on clothes or just, frivolous activities? Could you sacrifice putting that money to the side and using that money to purchase a home? Something that will bring you equity, something that has value, something where your money can work for you. Okay. And that's what I just want to talk to you about over the next 10 minutes or so. What are you willing to give up? What are you willing to give up to sacrifice so that you can put yourself in a better financial position so that you can be a homeowner? A lot of people, this is in your first year. A lot of people last year set a goal to own a home in 2018. A lot of people the year before that, there was the same goal for 2017, 2016. So it comes to a point where you have to make the decision to do something different to get what you want. Okay. And that's what this series will be. We'll talk about practical decisions. My goal and hope is that you will walk away from these series and after watching the playback of this video, and you'll make a decision to do something different so that you can once and for all achieve your goal of owning a home. So that 2019 won't look the way it looked in 2018, and you're still renting and you're still making money for the owner of your establishment, of your apartment, or of the home that you're renting. That you can put yourself in a position to own your own home, to build some equity in your own home, and one day be able to sell it or turn it into a rental property and be able to have equity and have some ownership. Okay, to put yourself in a completely different financial situation. Now you may say, Lola, my credit is jacked. I get it. Because a lot of us, we don't go forward with the process of starting the process because of bad credit and financial decisions that we've made in the past. Well, I'm here to tell you that Mr. Daniel Pete with Apex Mortgage, he's able to put together a plan for you to help you strengthen your credit. Okay, he's here to help you. He's able to take your information, take your salary, take your employment history, pull your credit, tell you exactly what you need to, tell you where you are from a mortgage standpoint, not Credit Karma. Okay, this is not the score on Credit Karma, will not be the score that Mr. Daniel Pete sees. Okay, it's a different scoring system used for a mortgage loan versus a consumer pool through Credit Karma and other third-party websites. Okay, so step one, if you have credit that needs improvement, would be to contact Mr. Daniel Pete, allow him to do a credit pool and tell you where you are, tell you exactly what you need to do to get your score up, and he'll do this analysis for free. Okay, he will give you a plan for your credit on exactly what you need to do for free. It will only be up to you to actually execute the plan that he lays out for you. Okay, there's no other deal that you can get that says, hey, not only are we going to give you a free credit report, but we're going to give you a free action plan to help you repair your credit so that you can be a homeowner. Okay, and it's not, for the weak at heart, I should say, that have bad spending habits. If your plan for your tax check is to take a cruise or to go to Dubai, then buying a home just isn't feasible. But if you're willing to not take a trip as soon as you get extra money, right? Use your 401k, borrow money from your 401k. If you've been on your job for 5, 7, 8 years, you have 401k, and it's a smart financial decision to pull money from your 401k to be able to put that towards buying a home and it's seasoned funds. So let me talk about seasoned funds. Seasoned funds are money that's used to buy your home must be traceable. Okay, you can't pull money from under your mattress and say, hey, I have $10,000 saved up. I have $15,000 saved up. I want to get a home. This money must sit in an account for 60 days. Am I right, Mr. Pete? 60 days. So that you can show that this money is seasoned, that this money you didn't just, it didn't fall from a tree, right? You got to have seasoned funds. So being able to show or trace where your money came from, if it was gifted to you. And again, an exemption would be money that's from a tax return, or money if it's from a lawsuit, any lump sum of money you get from a credible source. That money, there's an exception. But if you just pull out, $10,000 or $5,000 from under your mattress, you need to go put it in a bank account immediately and let that money sit and get seasoned, so that a loan officer, Mr. Daniel Pete, is able to justify and track where the money came from. Okay, so seasoned money. Don't find yourself unable to buy a home using your traceable money. Maybe it's your paycheck or your tax check. That's traceable money. Spending that money, but then having this money that we're putting in a safe. Right, I'm saying under a mattress, being facetious. However, money that you may keep in a safe around the house, if that's money you're using to buy a home and saving towards a home purchase, put it in your bank account. It has to sit there for at least 60 days, show up on 2 bank statements, okay, so that we can trace and see where the money came from and see that it's seasoned, okay. I talked about seller's credit, talked about your down payment versus your closing, grant money versus money that you have to pay back, which is a loan against your home. I wanted to also talk about who pays for the realtors. Okay, so if you are buying a home, you have an agreement. As a realtor, you and I would have an agreement, an exclusive agreement for me to represent you. I see it more like an attorney-client relationship, where as a realtor, we are responsible to represent our clients and to do and act in the best interest of our clients and our clients only. We can't act on your behalf, but also work out a deal that's in favor of the opposing side, which would be the seller. We have a fiduciary responsibility to be ethical and to represent our client. Okay, so with that being said, the great thing for you is that the entire commission of your realtor that represents you is not paid by you. Most part, if not majority, of the commission of a realtor is paid by the seller. Okay, this is, I'll try to word it the way it was worded when I first heard, right? This is the only industry where you hire and have someone work on behalf of you, and their pay is paid by the opposite or opposite side, okay, and not you. So if you select me as your realtor, I have to represent you, do what's in the best interest of you. But most of my commission will come from the seller. Real estate is an industry where the seller, the person who's selling the home, it's their responsibility to pay not only for their agent, but also pay for the other agent. Most, if not all, of the other agents' commission. Okay, and that's a huge plus. There's nothing else that you can do where you can't go get a lawyer and then whoever you're suing, they have to pay for your attorney most times, right? Not on the front end anyway, right? In real estate, you can. It's how the industry and market is set up. So the commission, again, is included in closing costs. If there's any commission left for you to pay, again, most of that commission is paid by the selling agent. So whatever commission that's left for you to pay is paid at the closing table. It's not money that you pay up front. It's calculated in that 6% closing cost that we talked about. Welcome, Lexi, welcome to joining us. I see you joining on the Facebook side, and welcome, Maureen, on the Instagram side. So talking about the who pays the realtors, knowing that you can start your home search without pulling any money out of your pocket. You can start fixing your credit, right, by sending a message to Mr. Daniel Pete with Apex Mortgage, and he will give you a free analysis. He'll give you a free credit analysis, see where you are, let you know what your credit score is. He will pull all 3 credit bureaus, and I'll talk about that. We have a couple of minutes left. Don't want to keep you guys here much longer, but we'll talk about the 3 different credit bureaus. There are 3 scores, okay? You have Equifax, TransUnion, and Experian, okay, which most people are aware of. And out of the 3 credit reports, a mortgage loan qualifies you based on the middle score. I'll give you an example. If you have Equifax, that's a 620. Maybe you have TransUnion, that's a 600. And then you have Experian, that's a 670. The score that will be used to assign you an interest rate will be the 620, or to qualify you to pay the home will be the 620. Hey, Samika, hey, thank you for joining. That's the score that will be used to qualify you, your middle score. So by allowing Mr. Daniel Pete of Apex Mortgage to pull your credit and give you a free credit analysis, let me say free again, okay? This credit analysis is free, right? For him to not only tell you where you are, because most people know what bills you haven't paid in the past, right? But more importantly, he will tell you exactly what you need to do. And we'll talk about that next week. We'll share and have him be able to speak next week, and just give some tips and just really go into what he's able to do and how he's able to help you credit wise. And no, you don't have to necessarily pay every item off that you've ever owed. I've learned a ton of things working with Mr. Daniel P. from Apex Mortgage. So we'll have him on next week if you're okay with that. Hey, Mr. Lomax. Hey, James Slater. Thanks for joining. So we'll have Daniel Pete, if he's okay with that, next week to be able to just talk about the credit side. I know that's something that hinders a lot of people from being able to buy a home, or just start the process. Like, you're scared to see the consequences of the decisions that you've made in the past. And that's okay, because we have a solution to help you fix it. And this journey may take you 6 months. It may take you 12 months. Whatever it will take you, the starting point is allowing and Mr. Daniel Pete of Apex Mortgage, and allowing him just to take a look at it and tell you what it is you need to do, what it is you need to pay off, what it is you may need to make payment plans for, and just really lay it out for you, so that you have a plan that you can actually take and you can actually work. And we can make sure that 2019 is different from 2018, that you are a homeowner and you are no longer wasting hundreds of thousands of dollars in paying for someone else's house by renting or through renting in an apartment. Okay, so that's all for me. If anybody has, and Mr. Daniel P has said sure thing, so we're going to have him next Monday on Mortgage Crush Monday. Tune in and have him been able to talk on the screen and really go deep into credit and different options, and maybe give us some scenarios on credit and how he can help you for free repair your credit. And I'm just going to throw in free like 1,000 times, because if you're like me, you love free 99, right? And just being able to get a free credit analysis. Thanks for joining, Kevin. Hey, Jerry in Connecticut. But just being able to have Mr. Daniel Pete walk us through what underwriters look for, what he'll be looking for when he pulls your credit, and again, giving you a specific roadmap to help you repair your credit and get your score where it needs to be, and he'll do it for free. Okay, so next week, make sure you tell a friend and have everybody on, because we know that's what most people are scared of, right? Of the credit, and looking at you think you can't buy a house because of past decisions, but we know, and I've seen Mr. Pete work miracles, and again, he does it for free. So thank you all for joining in Mortgage Crush Mondays. Tell your friends they can watch the playback of this video, and we will see you guys next Monday, same time at 6:30. Enjoy your evening.